Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, January 14th, 2022. And our top story today, cryptocurrency exchanges see massive Bitcoin outflow. Joining me now to discuss this and a lot more, he's the co-founder for Delphi Digital, Kevin Kelly. Kevin, it's great to see you. Thanks so much for joining us and Happy New Year to you.
Happy New Year too, Jeff. Thanks for having me back.
Yeah, it's great to always catch up on the latest on crypto. Kevin, let's talk about crypto Bitcoin's market cap. I mean, Tuesday of this week saw a huge outflow of Bitcoin, and the market cap has not done well since the beginning of 22. What say you?
Yeah, so you got a couple dynamics at play here. You know, we've talked about, and I think on your show before, that Bitcoin and the rest of the broader crypto market, are still pretty, have high intra-market correlations. And basically what that means is when Bitcoin sells off or when Bitcoin performs well, typically the rest of the crypto market serves as like a higher beta version of that, right? So you'll see bigger sell-offs or bigger upside, depending on the direction of in which Bitcoin heads. What you've really seen over the last, let's call it 3 to 6 months, though, is a lot of the macro tailwinds, right, that we've talked about on this show around global liquidity expansion and obviously dovish and accommodative monetary policy and all these tailwinds that we've been talking about have really kind of started to transition and almost turn into short to medium term headwinds, right? You have the Fed obviously coming out and now potentially raising rates a lot faster than most people, or at least the market anticipated. You've got tighter monetary policy. You're actually seeing a decline or a contraction in global liquidity growth, right? And Bitcoin really is a bit of a liquidity asset in a sense, right? In that it performs well when you have these looser financial conditions. And so because of some of these macro tailwinds that have now shifted to headwinds in the short to medium term, Bitcoin has taken it a bit on the chin, to your point, heading into this year, right? And we started to see, the market really roll over late last year, but that sell-off has almost been exacerbated throughout the first few weeks here in 2022.
So Kevin, if I'm an investor, whether I'm a retail investor, institutional investor, does that mean, in plain and simple, and again, we're not offering financial advice, investment advice, anything like that, but does that mean that I don't get involved in Bitcoin or cryptocurrency in general? Because Bitcoin is one flavor. It's a popular flavor and everyone knows the word Bitcoin, but there's Ripple, Ethereum, all different types of crypto. But what does this mean for the crypto market maybe in 22? Or we do expect kind of the similar headwinds throughout the year? Or is this a thing where, okay, I'm a long-term investor, let's look at things long-term here?
Yeah, I think for at least the first quarter here, I think these headwinds will certainly be with us, or they're going to be top of mind. I do think, though, taking a step back from a more macro perspective, I don't think the end game has changed, right? And so the narrative around Bitcoin, we've talked about digital gold. It's really this kind of store of value against fiat currency debasement, right? Devaluing the dollar, devaluing the euro. And what really happened in the aftermath of COVID and the policy response to that, if anything, really accelerated the timeline for that end game, right, of fiat currency debasement. And so in our view, the end game hasn't changed, right? And if anything, it's almost become more clear. We've got an accelerated timeline towards that quote unquote end game. And so from our perspective, if you're a long-term investor, you have a long-term time horizon, being able to scoop up Bitcoin at 40K, 45K is a lot more attractive than scooping it at 68K or 69K, right? So for us, we certainly think Bitcoin's attractive here, especially for those who have, longer time horizons, right? You're not trying to day trade this thing. It's an extremely volatile asset class. It will continue to be that way. There's a lot of leverage in the system. So what you actually saw with some of the most recent sell-off is you had what they call kind of cascading liquidations, which basically just means that you had basically forced sellers on the way down based on different price points that were getting triggered that made the sell-off seem a lot worse or more volatile or violent than it normally would be in, let's say, a traditional asset class like equities, right, which have also struggled a bit recently. So from our standpoint, long story short, we certainly think this is, an attractive entry point for those with long enough time horizon because the end game hasn't changed, right? And I think one of the big kind of narratives that we're watching heading into 2022 is you're also starting to see a bifurcation or a divergence between what we'll call like macro crypto, right? Which is really Bitcoin, a lot of things we're talking about here, and this, tech or Web3 crypto that is kind of the rest of this market, right? It's no longer acceptable to think about Bitcoin and then everything else trying to be Bitcoin because this market of crypto assets in general and digital assets is so robust and so diverse that your narrative or your investment thesis around different, tokens or coins is going to be different depending on what they're trying to do, right? And I think we're going to see a lot more of those, as I mentioned, intermarket correlations. I think we're going to see those weaken over the coming 12 to 18 months as more fundamental driven narratives really start to capture investors' attention.
Kevin, one of the things that we've talked about over the span of 21 was the concept of stable coin. I want to ask you a little bit about that and being a stable coin, a one-to-one relationship between the dollar and the cryptocurrency. How has that been impacted, or has it been as impacted through what you're describing, these headwinds that cryptocurrency in general has been reacting to?
Yeah, so we've seen throughout 2021 was a huge year for stablecoin expansion, right? And to your point, those are basically assets that are pegged or tethered one for one, typically with the dollar, but you do have other flavors of that against other currencies. One, it serves as a more seamless trading vehicle or mechanism for people to take off some risk exposure within the crypto market without necessarily leaving the crypto market in a sense, right? The other thing too is, as you mentioned, is what we actually look at is you can because all this data is on chain, right? It's recorded on these blockchains. What you can look at is the transfer volume of stable coins over time, right? So what you typically tend to see, and we saw this, prime example of it was this most recent sell-off. What you typically tend to see is investors and traders moving from your Bitcoins and your Ethereums of the world into some of these more stable coin or stable assets. And you can see that data verified on chain. So that's one of the things we look for to see maybe when risk off sentiment is getting a little bit too ahead of itself, right? Or maybe the sell-off is a bit exaggerated. Those are the types of things that we can actually track. But stable coins are going to be a very kind of fundamental piece of the crypto puzzle going forward for sure.
Yeah. Kevin, I need to take a quick break. When we come back, we'll talk about how cryptocurrency is everywhere, except maybe in the cash register. You're going to want to stick around and stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report. Both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're joined this morning by Kevin Kelly of Delphi Digital. Kevin, thanks so much for sticking with us this morning, my friend.
Thanks for having me back.
All right, Kevin. So I want to talk about the proliferation or use by consumers of cryptocurrency. Before I do that, this contraction, if for lack of a better term, of Bitcoin, does it give an opportunity to some of the what I would consider to be lesser known cryptocurrencies? You said some of them, the Ripples, the Ethers, but there are dozens of others. Does it give them an opportunity to kind of bolster their brand a little bit?
Yeah, absolutely. I mean, one of the big narratives that we're tracking and we've been pretty bullish on heading into not just 2021, but also heading into the new year is this idea around what we call alternative layer one blockchains, right? So Ethereum really was the incumbent, smart contract platform that a lot of people are very familiar with, but it has run into some issues because of its popularity, right? And because of the way in which it's designed. And so what you've seen is periods where you have the NFT craze, right, where everyone's buying these non-fungible digital assets. You have periods where there's demand for what you call block space on the Ethereum blockchain. And not to get too in the weeds, what you typically tend to see is when congestion, right, when there's a lot of transactions and a lot of demand for using Ethereum, when that rises, typically you see the price to actually transact on Ethereum rise as well. And so what that's led to is certain periods where you're basically pricing out a large cohort of people who can't afford, if you're going to buy an NFT and let's say it's a $50 NFT, if you're going to pay $100 in transaction costs just to buy that, the equation no longer makes sense, right? And that's pretty obvious. And so what that's given rise to is these alternative layer one chains that offer more speed and lower cost, which is a huge factor. And so they've been able to attract a lot more both investor but also market participant mind share, and they've gotten a lot more usage and attraction because there are certain things that are still kind of hindering or holding Ethereum back, right? So we have a handful of our alternative layer ones that we keep track of. People are probably familiar with things like Solana. Some other ones that maybe aren't as well known are Terra, Avalanche, a handful of these you can go and research yourself, but that's a big theme for us heading into this year. And it is one of those, concepts where depending on what the market narrative is, right, people are starting to fall further and further down this crypto rabbit hole from an investor standpoint. And it is no longer just about Bitcoin and ETH, right? Those are kind of great assets. And we still have, long-term structural bull cases on both, but there is a lot more opportunity, the deeper in the weeds you get.
Yeah, Kevin, let's talk about consumer use, mainstream adoption. There are some 30,000 crypto ATMs now in place in the United States. Gas stations, bars, restaurants, up from 1,800 about 4 years ago. So what does this say about, I do not own any cryptocurrency. It's not that I'm not interested in it, but as the price seems a little steep for like the Bitcoins, and I still need to kind of figure my way through it. But what does that say about mainstream? So mom and pop, Joe Camel, maybe not Joe Camel, but mom and pops adopting cryptocurrency for usage.
Yeah, I think one of the big misconceptions around Bitcoin and crypto at large is, there are very few people who are holding Bitcoin to be able to go and buy a Starbucks coffee with it, right? That's really not the purpose of holding it. It is more, again, as I mentioned, this longer term, almost investment in a sense around not only just maintaining purchasing power, but being able to fight against this trend, this long-term trend against fiat currency debasement. And so it's great to see, Bitcoin ATMs and the ability for people to be able to convert or have these fiat on ramps and off ramps. But at the end of the day, the real reason for holding something like Bitcoin and a lot of these other crypto assets, right, they're used within these protocols or applications for certain or specific reasons. And the token itself is more of an incentive mechanism to get people to participate in these networks. It's not so much to go and pay for, tomorrow night's dinner with, Bitcoin or with some crypto asset in your wallet, right? So it is one of those things that I think gets a lot of mainstream attention, but I think is a bit of a misunderstanding around what the purpose is of holding these. And very few people are holding Bitcoin, especially here in the US, for example, to be able to go, to your local Starbucks. There's way better payment options than paying with Bitcoin at this point.
But Kevin, what does it say that now the IRS, our friendly tax man, or tax person, I guess I should say, now has rules and regulations around taxation of cryptocurrency? Doesn't that signal in some way mainstream adoption of this type of currency?
Yeah, I mean, it tells you that it's hit mainstream enough that the IRS wants a piece of it, right? And it makes sense, right?
Congress wants a piece of it, Kevin. Congress wants a piece of it.
Exactly, right. And the amount of wealth, and this is another thing where you're seeing almost tax arbitrage in a sense, where people are moving away from the U.S., especially here in New York at certain points, to these more tax-friendly jurisdictions, because the impact, right? If you're an early stage entrepreneur or you're an early stage investor, and you're seeing considerable gains within this asset class that's growing at a multiple that is really unlike any other asset class that's out there today, so it's obviously attracting a lot of investor attention. If you're seeing that multiple growth on your wealth, well, the people want to maintain as much of that as they can, right? And not necessarily pay the tax person a large chunk of that. They're going to go elsewhere. And so it's a really interesting debate right now around, how much, what is the appropriate taxation level for something like crypto assets? Should it be treated differently from, property, for example, and some of these other traditional assets that people hold? And it makes sense, to your point, when you have like the IRS coming out and focusing more on this. They do want their cut of this, right? And I think that also signals that they understand, right? Congress understands that this asset class isn't going anywhere anytime soon, right? And if anything, it is the future of a lot of different industries, right? It doesn't fix everything, but it fixes a lot of industries. And so that recognition, I think, is certainly kind of a bit of a hat tip to crypto and the rest of this market, that, we recognize that there is real value here and that there's real value being created here. And, it makes sense that Congress wants a cut of it.
Yeah, well said. And I think we're going to see more and more of this over time, and you're at the pinnacle of it, Kevin. Kevin, we really appreciate having you on, and look, we look forward to having you back. You break it down so well, Kevin. Enjoy the rest of your week, and have a great weekend. We'll talk to you again very soon.
Thanks, Jeff. Always enjoy these conversations.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line, and don't forget, for all the information in lifestyle, wellness, tech, finance, and so much more, check out today's edition of our daily newsletter, The Morning Pulse. Want to check out our latest content or search our archives? Then check out our streaming partners, Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow for BRN Weekly. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a tax doctor now for a tax emergency analysis.
Call 800-224-6439.